Welcome back. Well, the market is holding on okay as far as Nifty is concerned, but railways has one space which has been doing quite well for itself. In fact, if you pull up the stocks of IRFC, RVNL, Jupiter Wagons, Sitagar Wagons for the last 1 month or 3 months, you will see a traction of anywhere between 30 to 50% in these counters, given the massive run-up and the interest that we have seen in these names. Jupiter Wagons is one of such company, and we have the management joining us on the show. Mr. Vivek Lohia, the managing director at Jupiter Wagons, is with us to talk to us about that. Mr. Lohia, hi. Thanks so much for making time and speaking with ET now. Well, we understand that the most recent news flow is around the capital raise that you have done, the QIP route. You're looking at raising around 700 crore rupees. What's the objective of that, and through which players are you looking to get this, capital fund raise happening?
Yeah, good morning. So the whole idea is that there is a lot of tailwind out right now in the sector, and we are expecting sizable order books to come in over the next few quarters. So as we have kept on saying that we want to increase our wagon capacity from currently we are doing about 600 wagons. We want to take it to over 1,000 wagons a month. As well as we have recently entered the brake business in the railway space, and there also we see a huge opportunity. So again, we have joint venture partners there. So there again, we are looking for capacity enhancement, not only for the Indian market, but now we are looking to export to the European market. And finally, I think there's a lot of opportunity in terms of further backward integration in terms of wheel sets and other products. So I think it's an overall outlook from which we are doing the fundraise. And our idea is that over the next year and a half, to invest about close to 1,000 crores of new capex.
Interesting. Vivek, you mentioned that your order book stands at 6,000 crore rupees right now. Tell me, what's the visibility, considering you're now looking at expanding to, the European geography as well? And what then is the revenue visibility? How much of the orders would be executed this year? How much next year? What's the timeline?
So the current order book which we have, we are looking to execute it over the next 15 to 18 months. That is what our timelines are. In terms of visibility, again, on the private space itself, there is a very strong demand which is still there for new cars. What we are seeing is that quarter on quarter, whatever we execute, we are getting additional order books. And railway is now going to be announcing and tender for about close to 50,000 odd wagons, which we are expecting anytime. So I think that again they want supplies over the next 18 to 20 months against those order books. So definitely there is a lot of traction in the sector. So it's about how well we gear up for the execution.
Right, and given that recently you had Texmaco surrendering their contract owing to the lack of capacity and the low margin business, what about you? Are there any challenges that you're witnessing in regard to execution or on the profitability front?
No, our model is slightly different. One is that we are much more broad-based. It's not only wagons, we are in the commercial vehicle business. Then we are also on the container side, we are on the braking business. And on the wagon side also, as I mentioned, we are very selective when it comes to order books. Our focus over the last year and a half has been on the private side of the business and on the execution. So I think this has been our forte, and due to our size and the backward integration, I think we have been very successful in doing the execution. Going forward also, I don't see much challenge on the margins. I think there is, as I've said, there's a lot of traction in the sector, and we expect sizable order books. So currently our main focus is to expand our capacity and on the execution piece.
And the capacity and execute well. But if I have it right, Vivek, the plans were also to perhaps get into the lithium-ion batteries and tap into the entire EV opportunity as well. What's the plan there? What's the kind of investment you're making? What kind of revenues we can expect from that?
Yes, so that is a very interesting space. So both on the commercial vehicle side and on the railway side. So on the commercial vehicle side, early next year we are going to be launching our first commercial vehicle. It is going to be a truck with a 1 ton payload. And the idea is that over the next 6 to 12 months to launch a couple of more vehicles from a 3 ton payload all the way up to a 5 ton payload, because we expect that segment to grow significantly. And that is the last mile segment in the country where currently it is all IC engines. The market is about close to 600,000 odd vehicles, and especially in the metro cities and cities which are densely populated, there is a definite shift, and there is a government incentive also to shift from IC engine to electric vehicles. So that is one segment which we are targeting. On the railway side, again, railway has been using generally the older battery technology. So the idea is to shift from the lead acid kind of battery to the lithium ion. So we are already conducting trials on the railway coaches. The trials are going to be completed by the end of the year. Plus, on the Vande Bharat also, we have received an order book from Siemens for the Vande Bharat. So there, as you're aware, the railway rolling stock population is huge. So I think once the trials are over, we expect a sizable demand to come in from that segment. But in terms of revenue projections on that segment, it's little early. But yeah, definitely we see a lot of opportunity and visibility there.
Talk about your margins as well, Vivek, because they're better than your peers at around 13%. But this level has also been persisting since the last 5 to 6 quarters. Are the margins expected to improve going forward, owing to the diversification and the high margin orders that you're gathering in?
No, so definitely going forward, we expect not significantly, but definitely expect the margins to improve as the new businesses which we are diversifying into, especially on the braking side, and now we are targeting also export of wagons. So as and when these kind of businesses kick in, we definitely expect the margins to improve. But obviously, we are already much ahead of our peers, so we don't expect any significant improvement. But yeah, as the revenue size also increases, as we expand capacity and the revenues increase, definitely a small increase in margins also will have a huge impact on the profitability of the company.
Good to have you on board. Thanks so much for giving us a sense of how things have been shaping up, because this certainly has been a sector that has been the cynosure of all eyes in the markets. That's the management of Jupiter Wagons.